millions of life insurance and annuity customers. What happens to them if AIG goes DOA? Well, let's ask the president of the American Insurance Association, who also so happens to be Montana's former very popular governor, Marc Racicot. Governor, what do they do? If you have a life insurance policy, annuity, any of that, with AIG, and tons of folks do, what happens?
Well, the fact is with insurance, as I am sure you know, Neil, there are 50 regulators across the United States of America, plus 5 in the territories, plus 1 in the District of Columbia, all of whom have solvency requirements. The solvency requirements for life insurance companies and property casualty companies are very strict. They're very carefully and vigilantly monitored. And there is every report from every analyst and every regulator indicating that there is capital and reserves available to meet the requirements that AIG might have in reference to its policyholders. So that's one avenue of approach. The second one is...
On that point, Governor, I'm sorry to interrupt you there, but I heard that there is a dollar limit to that. In other words, that despite the policy that you might have gotten, whatever it is, there is a cap on it, much as there is at the FDIC. Now, I might have just gotten bum information, but can you tell me what's true?
There may be a bit of confusion with state guarantee funds, which was what I was going to mention to you as a second avenue of recourse, although, quite frankly, we've seen no evidence to suggest that there are inadequate reserves or capital available to meet the requirements of policyholders. There's no question in the minds of apparently regulators, at least as they are being discussed across the country, that in fact are adequate reserves and capital available to meet the demands of policyholders. But even if there is an inadequacy, every state in the union has a guarantee fund. And those guarantee funds are a vehicle that have been utilized for the last 40 years to address questions of solvency. Now, sometimes in those individual states, although each state has a different fund, they have a fairly universal amount of coverage that covers people, for instance, with property up to $300,000. So just like FDIC has a certain cutoff limit that they guarantee with deposits, the guarantee funds have different cutoff funds, or they cut off at different points in time with different amounts of money for different kinds of coverages. And they're unique to each individual state.
But the reason why I ask is that I deal with a lot of Wall Streeters here telling me, you know, Neil, I've got multi-million-dollar policies here on my life, my wife's life, and all this stuff. There's no way if this puppy folds that they're going to make good on that if something happens to me.
Well, you know, Neil, we've seen no evidence to suggest that there are inadequate reserves to meet the requirements that are there. The problem, as you know, with AIG is in the derivatives and subprime businesses that ended up causing some significant amount of difficulty.
No sign that that has spilled over into those other areas, because as I understand it, the insurance side of AIG is just hunky-dory fine. It's all the other stuff that's not fine. So is there, in the event it goes out of business, how do regulators deal with that? Separating that, or what?
Well, they're separate. They're actually separate companies. They're separate corporate entities, and there are separate requirements for the posting of statutory reports that require reserves to be adequately documented, solvency to be established. Very, very strict requirements. And you know, frankly, we haven't seen all the evidence yet, and I wouldn't say that under any circumstance virtually everything is unimpeachable. But from every report that we've got from regulators, although we don't work with AIG on a day-to-day basis, nonetheless every report we've received and that we've been able to review indicates that their position as an insurer is a sound position.
All right. Hope you're right, Governor. Always good seeing you. Thank you very much.
Good to see you, too.
All right, well, no cut from the Fed, no answer for AIG yet, but plenty to ask our Fox Biz All-Stars about. First